Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. And joining me are my co-hosts, zooming in from the virtual world, CoinDesk Managing Director of International Content, Emily Parker, and filling in again for Lawrence is Chief Content Officer, Michael Casey. Good morning, you two. Michael, good to have you again.
Thank you, Christine. Always a pleasure.
How are you enjoying the CoinDesk spaceship?
It's a ride. It's a true ride.
Right, and we do see the crypto markets are still down today so checking in on Bitcoin, 44,085.96 and change and whatever. And Bitcoin is down about just over 2% over the past 24 hours. And ETH is also down about 1.8%, trading at 34.27 right now. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news events and data. And looking at our top stories of the day, so Michael, are we moving beyond Elon right now? The theme yesterday seemed to be that Bitcoin doesn't need a king or savior. Where are we today?
Look, I hope so. I just find the whole Elon focus a little bit much, and so I'm pretty happy to think that we might be moving beyond it. I don't know. I mean, to me, it's just a question of whether or not the broader story around whether this is energy story or this whole bigger one of what's happening in global markets is the driver or not here.
Yeah, and we do see a lot of pressure on the crypto markets. Emily, Coinbase is below its $250 reference price. What do you think of the role of sentiment and the impact of influencer culture has had in the crypto markets?
Yes, that's really the question here because, yes, we've seen a brief dip, but if we look at the larger picture, Bitcoin was only a few $1,000s a year ago, right? Like it's still very high. So the question is the larger narrative about Bitcoin going to hold? And the larger narrative is that there are more institutions joining the market, and that is what has been pushing up the price over the long term. And as you've said, there's a lot of sentiment-driven dips like all these Elon Musk tweets. But I think what we're going to see over the next months is how important these really are and how much the larger narrative matters for the price of Bitcoin.
Mm-hmm. Well, speaking of influencers, our first guest is a social savvy serial entrepreneur with millions of followers. He's on top of all the latest cultural trends on the internet, migrating his family wine business online, co-founding restaurant reservation app Resy, and investing in early Silicon Valley tech firms like Facebook and Twitter. Most recently, he launched VeeFriends, an NFT marketplace. Joining us now is Gary Vaynerchuk, CEO of VaynerMedia and Consensus by CoinDesk speaker on May 24th to the 27th in New York. Welcome, Gary.
Thanks for having me, everyone.
Great to have you on the show. All right, so Gary, you were actually supposed to come onto the show 2 weeks ago, but you had to cancel because the NFT marketplace didn't go as planned. My thoughts are that launching NFTs must be harder than it looks. So tell us what happened and how is it going right now?
Web3 is interesting stuff. For me, I come from such a consumer place, right? I launched an e-commerce wine business in 1997. Web 2 is mature. And yeah, to your point, on May 5th, we were just not ready. I was so excited about 5.5. 5 is my favorite number. We paired up with the incredible team at NFT 42 on the Nameless platform. They did their job. I feel like I just didn't have a couple of things tight enough. And so, I think even though we probably lost some momentum and lost some initial sales, having a product that wasn't as strong on mobile from a consumer standpoint, I think, the crypto community is and the Web3 community is incredibly patient with its innovators, from NBA Top Shot to Artifact to Zed. For me, what I was worried about was 80% of the people that I knew were going to be buying, because I was paying attention to my Discord, were buying for the first time, buying with a non-custodial wallet for the first time. I thought it was very important for me to launch it as clean of a user experience as I could, so we did push it by a week.
Okay. So you've been hyping up VeeFriends for weeks. Can you tell us about what this NFT marketplace is all about? 10,000 V tokens are up for grabs. What are you selling here?
I'm building an intellectual property. I think NFTs during this era will be looked back on as a place where the Harry Potters, the Transformers, the Star Wars, the Thundercats and Care Bears and Rainbow Brights were created. So for me, VeeFriends is a world I've been thinking about for a long time. Originally, it was going to be a toy product that I launched a couple years ago, but the way the NFT market evolved. The other thing I did was take advantage of the smart contracts. What I innovated on a little bit was I created a conference called VCon, where every one of these 10,255 tokens is also a 3-year pass to VCon, which is a super conference that I'm looking to put on once a year over the next 3-year period, kind of like a South by Southwest meets a Davos, meets a little Coachella and culture and things of that nature. So really excited to kind of push the way people think about NFTs. I think the smart contract on realities have not been touched. The off-chain, off-line realities have not been touched as much as I think they can, and that was a big ambition for me with VeeFriends.
So Gary, the tokens give auction winners either access to you via breakfast date or virtual meeting, gifts curated by you, or admission to your events. I wonder, is there any concern that people are being commoditized, or, on the one hand, this can be seen as very empowering, but on the other hand, it could be seen as, commercializing people and their services so blatantly on the free market. Is that any concern to you?
The concern to me is the same that it is with everything in the world, whether that's social media, the internet, the blockchain. I think intent and humanity matter. And I think everything, people are concerned of exploitation with capitalism. People are, concerned about it with socialism. People are, I'm not too overly worried about it. The access to me was 2% of the overall project. So for me, what I really wanted to do, to be frank with you, that was a late addition. That was in response to the fact that for the last 60 days, the enormity of celebrities and influencers that were putting out projects that were just a picture of them done by a digital artist they commissioned and were selling for tens and hundreds of thousands of dollars. I thought that there was a better way to go about it. And so for me, I'd love to pay for a token and collectible that I own in perpetuity that may also allow me to play tennis with Novak Djokovic or go into the studio with T Grizzly. And so I'm not overly worried about that. I'm more worried about people not trying to provide value. And I think, to your point, the people that are gross and ridiculous with it will not find a marketplace, or may find a marketplace for a few minutes, but long term will hurt their reputation.
So just kind of piggybacking off of that question, just about kind of the role of influencer culture in NFTs. So in theory, NFTs are supposed to democratize the marketplace, right? But in practice, what really happens is that people with big networks and people with well-known names and people who have influencer status have a much easier time breaking into NFTs. And like this sort of smaller, lesser known artist has a much harder time breaking into NFTs. I mean, it's the same as in the traditional art world, right? And as you said, even some...
Do you agree with that? Because I think, to your point, I think you're right 60 days ago, but I think it's been really cool to watch what's happened over the last 60 days, maybe 30 days, where you've seen enormous influencers and celebrities sell 1 or 2 tokens. I think, to your point, maybe 90 days ago when we had that America's finding out about this, but I think if you look carefully, I think it's been really fun. Because I love the market is the market is the market. I think even though one, like an Eminem or Dame Lillard, have spent their lives executing to create this community and interest, if they don't come correct enough in an NFT execution, the market has told them so. No?
Well, that's probably true, but that also sort of proves my point. Like, even if some celebrities aren't able to make it in the NFT marketplace, imagine how hard it is for the ordinary person, right? Because for the most part, a lot of these celebrities have teams of people helping them. Some of them have direct access to the platforms. The platforms will help them, or they'll give them better placement. They have huge social media networks. So I take what you're saying, but just, amplify that by 1,000, and you have the average person trying to get into the NFT market, and they're just kind of going to be completely invisible.
I don't think democracy or open platforms or decentralization means everyone should win, right? Like, I'm a byproduct of winning on social media. Hundreds of millions have tried to win on social media and haven't. I kind of love that. I actually think the market is the market is the market is really kind of cool. Like, Blau wasn't a famous music artist, but he built community and leverage within crypto. He'll go and have his success. He'll outperform people that are 40 trillion times bigger than him on Spotify. To your point, just because there is NFTs doesn't mean that you're going to slap some pretty piece of art on there and then you're Michelangelo. There's a lot of work that goes into actually even having a chance to succeed.
Right. I guess my point, just to finish this thread, is that for the average person, though, because the myth of NFTs, right, is that it is a more level playing field. And what you were describing is very similar to the current social media environment in which, someone coming in and starting from scratch is going to have a very hard time building that influence, and they are going to have less tools and resources than a celebrity would have. That's just my impression of the NFT market.
I think that's a tweak on the myth. I think the myth, to your point, like whoever believes I'm going to make something in Photoshop and I'm going to win just because I posted it on OpenSea, that's called delusion. On the flip side, the person that's sitting at home who's very talented at art, the fact that she or he can put it on the marketplace and have a chance, which is very different than Walmart or Toys R Us or Home Depot or QVC selecting you and saying, yes, you can present on my shelves or on my screen. That is kind of cool.
So what, Gary, needs to happen to enable that kind of cool aspect of it? Is there anything more that needs to happen in this very nascent industry to give that greater access?
Well, I think the access exists, right? The marketplace. It's eBay. It's it's Instagram. The ability to sell the product exists. I think the point earlier is well taken. If somebody has huge audience, that we've seen platforms give them front page access and things of that nature. But let there be no confusion. These platforms are not smitten by these influencers or celebrity. They want their audience. They're trying to build their business. I think ideology is a very intriguing concept. This is incredible opportunity for people that nobody's ever heard of, no question. I also think that there are people that people have heard of that are also going to do well. On the flip side, there are many that aren't. I'll be very frank. There have been many people who've launched projects in the last 30 days who are dramatically more famous than me, have had much bigger platforms, have been launched on third-party platforms where they've put them on the front page. I built mine on top of Nameless and with NFT 42 and built a URL to drive towards, and our results have been staggeringly different. But I think that came down to strategy and execution, effort, intent. And I think that will play out quite a bit. And when I lose, which I do all the time as well, that's also the market telling me I'm losing. So I think what needs to happen is accountability and responsibility on the IP creator or the artist to realize there's a lot they can do. Are they willing to? By the way, they could have gone on TikTok 2.5 years ago and put out a lot of content and amassed 5,000, 500,000. There's so much opportunity. I would argue that people are crippled by opportunity. But I think to the point earlier, I don't look at this as the place I was born, communist Russia, where everyone's going to be the same. That's not the promise, I think, of NFTs. I think the promise is that the distribution of a digital asset on this chain doesn't require a gatekeeper like a retail store or an art gallery, which is cool and is similar to the way it played out with social media a decade ago. That doesn't mean some people are going to do better than others. That's just the nature of humanity.
So Gary, just pivoting from that a little bit, there's, some of what you're describing also speaks to this whole meme culture, this meme investing world that we're in. What do you make of, Dogecoin, GameStop, the whole Elon phenomenon? Because it speaks very much to what you're addressing here.
I think humans are media platforms, and the world is struggling with that transition. What do I think about it? I think I think that there was a time and age when humans walked Earth and they did not think that gold was valuable. There was a time when we did not think that a diamond was valuable. I think we're running through a mature internet and an emerging blockchain human reality. And I think a lot of us are trying to navigate and figure it all out. I think it's too early to put a cherry on the sundae of what's happening here. But what I can tell you is the humans on top of social platforms are building significant influence that doesn't require a medium in between them and the audience, and that is causing new realities that we haven't seen over the last century.
So just quickly to just zero in on that for 1 second, the rise of Dogecoin, for example, and then there are all these sort of imitator dog-themed coins like sheep coin, right? What do you think of this phenomenon writ large? Like on the one hand, yes, it's very democratic, anyone can join in, but on the other hand, some of these coins really don't have any fundamental value, and a lot of people could seriously lose money. I'm just curious what you think of this phenomenon in general. Is it good for the crypto industry, or is it dangerous?
I think it's a great question. I think ultimately in the short term, it'll probably be dangerous because, the one thing I always try to tell people is like, invest in what you understand. I don't invest in most things. I just don't because I don't understand it. And I think that then you're just into gambling, and I'd rather just bet on a sporting event and enjoy it. So I think to your point, many of these things, it reminds me a lot of internet 1999 and 2000. I believed in the internet so much, but I couldn't understand why all those companies were worth so much money. And then as everybody probably on this show knows, and definitely many at home, we had March and April of 2000 where 90% of those stocks went out of business, went to zero. But in there was Amazon and eBay, which were remarkable investments because the internet was the internet. And that's kind of how I think of altcoins and NFTs. I genuinely believe that 98% of what's out there right now will not be a good investment. I truly believe that 99% of the NFTs that people are buying today will not end up being a good investment. On the flip side, I think the macro concept of NFTs over the next 3 decades is one of the most significant consumer behavior technologies we've seen, the most I felt since social media. And so, to your point, I think that's why this is such an interesting time that everyone's talking. If that is true, if history is repeating itself with internet stocks, that's a pretty intense game, right? Most go to garbage, which is quote unquote, don't forget all the articles written about the internet in the summer of 2000. It was a fad. See, we told you. That's going to happen when we have an NFT winter, whenever, if, is going to happen right now because there's too much supply against demand.
NFT winter, yeah. Gary, we're certainly in early days right now, and it'll be interesting to see how it develops. But Gary, thank you so much for joining us this morning, and congratulations on the launch of your NFT marketplace.
Thank you. Cheers, everyone.
All right. That was Gary Vaynerchuk, CEO of VaynerMedia. And mark your calendars, in less than a week, Gary will be one of the top headliners at Consensus by CoinDesk. That's happening on May 24th to the 27th. Register now for the biggest global event in the crypto and blockchain industry at events.coindesk.com. Coming up, looking into the headlines in Asia and crypto markets analysis with Trade the Chain, a global community of traders.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money at Consensus by CoinDesk. A live virtual experience of leaders, changemakers, virtual reality meetups, keynotes from Ray Dalio, Gary Vaynerchuk, and much more. Get an up-close look at the boom in crypto, the surge of institutional investment in Bitcoin, NFT mania, the breakneck innovation in decentralized finance, and the coming disruption from central bank digital currencies. Join us May 24th to May 27th for Consensus by CoinDesk.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, May 18th, 2021. I'm Angie Lau. Let's get you up to speed from Asia to the world. Blockchain and distributed ledger technology advancing at a rapid pace today in Asia. Once upon a time, many even wondered whether banks could keep up with all the rapid innovation. In Singapore today, those banks are taking the lead, and in this case, report that it's not just innovation, there's an enterprise case to be made. Deutsche Bank, along with Singapore and Hashtags or Stacks, report that Project Benja has been finalized. Now, Project Benja is a proof of commercialization on digital assets, and it tested an end-to-end bond lifecycle management to create what is called a bond in a box, DLT platform. Benja has tested integration with CBDC initiatives such as the Monetary Authority of Singapore's Project Ubin, and even private stablecoin projects such as the Facebook-backed Diem, formerly known as Libra. We caught up with R3, head of Asia Pacific, Amit Ghosh, who's bullish on how banks have been entering the digital asset space of late.
Various use cases are in play right now across, trade, capital markets, digitization of assets, which is what you heard in the news today. And especially in Singapore, all the leading global and local banks experimenting, as well as launching in production in some cases.
This follows earlier moves by Singapore via its sovereign fund Temasek. In March, Temasek-backed Astria tokenized private equity bonds on the iStocks platform. In Korea, Koda, the digital asset custody firm of the country's largest bank, Kookmin Bank, signed a big client. Kosdaq-listed Korean game developer WeMade recently revealed that it holds over $130 million worth of crypto, and it's now entrusting its crypto holdings to Kookmin Bank-backed Koda. WeMade's blockchain subsidiary WeMade Tree has also signed a contract to entrust its Bitcoin digital asset to the custody service. Blockchain watchers in the country say Korea developing its own custody service is a big deal for the industry.
이 수탁 사업이 큰 문제 없이 진행이 된다고 하면 은행도 새로운 금융 산업으로 발전시키려고 할 것이고 기업들도 암호화폐에 대한 태도를 긍정적으로 변화시키는 그런 효과가 있다고 생각을 합니다.
In other words, custody may be the missing link between institutional investors and the country's crypto industry, whose prospect has been less than stellar lately. All right, catching up with Bitcoin and friends. Bitcoin still seeing red, down 0.2%. And the top 10 for cryptocurrencies, not a bad day for Litecoin here, up 5.2%. Polkadot also up slightly, announcing its pre-production ecosystem, Kusama, now ready for parachains. Meanwhile, in Japan, tech giant Sony, the company responsible for all those PlayStations in our living rooms and so much more, revealed that back in 2019, it filed for an esports crypto betting patent. Yeah, that's right. Sony has yet to announce when crypto betting will be open for the billion-dollar esports industry, though. But the gaming giant has been interested in crypto for a long time. In 2018, the company revealed that it was working on a crypto wallet of its own. So what does this all mean? Well, it seems like Asia is starting to pave the way, with Japanese-Korean gaming firm Nexon recently announcing their $100 million Bitcoin shopping spree to NFT projects from the likes of game developer Animoca Brands. The inevitable marriage of gaming and crypto starting to take shape right here in Asia. And that's the Daily Forecast. I'm Angie Lau. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Time for a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is right now at 43,600 and change. Bitcoin is down about 2.6% over the past 24 hours, and the CoinDesk Ether price ETX index right now at 3366. ETH is down about 2.4%. And joining us now to discuss the crypto markets is Nick Mancini, research analyst at Trade the Chain, a global community of traders. Welcome to the show, Nick.
Thank you for having me. Great to be here.
Great to have you. All right, so we saw Bitcoin support at $42,000 yesterday. Has the dip changed the narrative of Bitcoin's direction and institutional adoption? What's your outlook on Bitcoin?
Yeah, so the outlook on Bitcoin right now is based on sentiment and based on what we're seeing. I would categorize it as neutral, slightly bearish. After this dip, we've seen support catch at 42K about 3 separate times over the past 36 hours. This indicates strong support and good interest from both retail and the institutional level. And then looking at sentiment, we're seeing that sentiment is beginning to form a bottom and beginning to go from short-term bearish to short-term neutral, which means it's attempting to fit the technical narrative, and sentiment is reacting to what we're seeing on the technical level and saying, things are looking better. So people are reacting to that and placing buy orders more so than they're placing sell orders. We're not entirely sure if this is going to last. This is typical for, a double kind of correction where you see this, one severe move followed by another severe move. Generally, we see a catch, which, you expect to see sentiment be positive from this. But we're waiting on a few more indicators to actually say whether Bitcoin is going to be headed further south or further north. We're truly in kind of consolidation and a wait and see period.
Nick, an extension of what we're calling Elon Gate, the Musk weighing in and affecting sentiment, as you've talked about, is the idea that this energy issue becomes a major test for institutions. And therefore, the question I put to you is, does any of this weigh, and what do we do about the thesis that institutions are going to want to buy into crypto? Is that being challenged at this stage? And what does that mean for the direction broadly of Bitcoin?
Yeah, so the institutional narrative is an extremely important one for Bitcoin. The first few run-ups or bull runs, whatever you want to call them, were primarily retail driven, and the story always went, when are the institutions going to step in? When are we going to see that adoption? And the first narrative prior to this kind of energy topic that we've been talking about was regulation. The big macro investors of our world were continually saying, I bet X country is going to ban it, I bet Y country is going to do this. That never happened, and we actually saw Bitcoin classified as a commodity. Ethereum was given, safe haven status from being a security. So we overcame that narrative, and now we're on a new narrative, and green energy is a hot topic given the current administration and where things are headed in the future. So I understand the narrative, and I understand the need to discuss the problems related to Bitcoin and environmentalism. But if we compare Bitcoin to, let's say, global financial institutions, or even countries, or even minting dollars and pennies and quarters and things like that, Bitcoin is paltry in comparison to the energy consumption of the individuals and institutions and nations that I just mentioned before. So I think it's important that we discuss this. I don't think it's positive for Elon to make a statement without basis and facts and legitimate opinion from the scientific community, and to just make a statement out there given the kind of grip he controls over sentiment, and he understands that. I don't think that is positive, but what I think is positive is having the narrative and overcoming the next level of Bitcoin worry or Bitcoin doubt. I think this is good because we can focus on innovation, and we can focus on new topics moving forward, and how Bitcoin is going to better the environment and how we're going to improve the network moving forward.
And just to pivot away from Bitcoin for a moment, what is your outlook on Ethereum? Because it's been holding relatively steady compared to Bitcoin.
Yeah, great question. And Ethereum has been the hot topic. And I think that's another reason why Bitcoin has been so weak for the past few weeks, is all the time and attention has been focused on Ethereum in the markets. And especially when we talk about Ethereum, we have to mention DeFi. DeFi growth has been explosive. I think in the past year, $100 billion worth of assets have been locked up. We've seen the growth of various chains competing with Ethereum. So Ethereum is really holding the narrative right now in the market. And we're seeing, Grayscale and other, trusts and ETFs and things like that advertise on various networks. So previously we were seeing Bitcoin, 6 months to 12 months ago. So Ethereum is very much in the throes of the market right now. And I actually still have a bullish outlook on Ethereum in the short term, more so than Bitcoin. I think DeFi is is where the market is heading right now in terms of interest. You have to get yield somehow if you're an institution or you're an individual trying to beat inflation. The only place to do that right now is DeFi. The market leader in DeFi is Ethereum, and there's a couple of big updates coming up with the London fork to eventually move over to proof of stake and decrease costs on the network. So I am very bullish on Ethereum in the short term.
Yep. Alt season is alive and well. Nick, thank you for joining us this morning. Appreciate your insights.
Thank you so much for having me. It was great to be here.
Yep. That was Trade the Chain research analyst Nick Mancini. Coming up, a marketplace for home loans on the blockchain with Figure, and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Online lending firm Figure is bringing securitization, the decades-old Wall Street practice of repackaging home loans into bonds, to the blockchain. Recently, they announced a subsidiary received regulatory approval to become a FINRA-approved broker-dealer and an SEC-registered alternative trading system, which means Figure can begin tokenizing their marketplace of loans. Joining us now to discuss is Mike Cagney, CEO of Figure and co-founder of SoFi in San Francisco. Welcome, Mike.
Thanks for having me.
Mike, perhaps you can explain in simple, very simple terms what Figure does, how it seeks to change the whole business of home lending.
Sure. So we started Figure back in 2018 with the idea that we could apply blockchain to various parts of financial services and generate pretty significant value. So lending was the first vertical that we focused on. And the idea was we could take out up to 100 basis points of cost from point of loan origination through to financing, through to deal execution and securitization. And we ended up building a blockchain called Provenance, designed specifically for financial services to be able to provide scale and data control and so forth. Initially in what we would call a quasi-permission chain, and then ultimately, more recently now a full public open source decentralized proof of stake blockchain. And we processed billions of dollars of transactions through Provenance and have demonstrated about 117 basis points of cost savings. But lending was really the starting point. And what we've done is we've been able to build Provenance into a whole set of use cases, such as banking and payments, cap table management and private company exchange, fund custody and administration. And so we're opening up and de-risking lots of blockchain use cases that are billions of dollars of market cap that we think ultimately manifest back to the blockchain. The SEC and FINRA announcement are important because it's something we've worked on for over a year to get that broker-dealer exemption to be able to operate and exchange for securities on blockchain. And so now we can take not only our whole loans and loan participation that we used to trade on Marketplace exclusively, but now the securities that are generated from those loans and marketplaces and trading those on blockchain. But where it really provides an interesting opportunity is if you think of our cap table management business, we have Figure, for example, that uses Provenance to custody its equity certificates. We can now very easily turn on secondary marketplaces for private companies like Figure, allowing investors to trade T-instant equity settlement through the ATS exemption that we have.
Mike, there is a line of thinking, though, that blockchain is a really bad way to do almost anything. With regard to securitization, critics say it unnecessarily adds another level of complexity and that traditional centralized systems are good enough. How would you address that criticism?
So I think blockchain is definitely overused in financial services. It's not the most flexible and scalable technology in lots of circumstances, but where it becomes really valuable is circumstances where you can replace trust with truth and circumstances that benefit from real-time bilateral transaction settlement. And securitization is one such example. As I said, we've demonstrated 117 basis points of cost savings using blockchain from point of loan origination through to securitization, through to deal execution. So, and we've audited this. We've done it on hundreds of millions of dollars of securitization transactions. So I think we've kind of put to rest the idea that it's not an effective technology for securitization. In fact, it's incredibly effective, and that's a $6 trillion market. It's also incredibly effective for banking and payments using stablecoin payment rails versus Visa, MasterCard interchange. It's incredibly effective for creating bilateral exchanges that avoid the problems that we had with GameStop and the centralization that DTCC plays in the U.S. equity market. So it's an enormous technology that we think has huge application and huge upside.
So the SEC kind of casts a frightening shadow over the crypto industry. It's seen as very tough and also as having a lack of clarity. How hard was it to get through the SEC process and to actually get approval?
So it was a challenging process, and we spent over a year working on it. And one of the key points was that the SEC didn't want an SEC registered entity to take custody or control of a digital asset on blockchain. And one of the things, so if you're a centralized exchange, that introduces a ton of challenges, right? Because by definition, as a centralized exchange, you're taking intermediation and control. Our exchanges are completely decentralized, so they're truly bilateral. Counterparties face off directly against each other. They use stablecoin wallet to transact real time for assets, and so ultimately we were able to drive comfort for that fact. And so what we're able to do are operate these decentralized exchanges for securities now, which again opens up a huge opportunity. It's way beyond loan securitization. It's any security we can now represent on provenance and provide two-way marketplaces for.
Mike, the talk of securitization and tokenizing assets has been around for some time. Back in 2016, people were promising this as a huge step in a value proposition for blockchain. And now it does look as if you and others are finally coming to market with these things. What has changed? How has the technology matured, or is it a regulatory shift that's allowed this to move forward?
Yeah, I don't think it's a regulatory shift. I think some of it's technology and some of it is an evolution of mindset. So we're not the biggest fans of tokenization of securities. What we're big fans are of digital native assets that can be represented and traded on chain. I think the challenge of tokenizing something, so for example, a stock that I'm representing as a token on the blockchain to provide for immediate settlement, there's still now a trust element that stock does in fact exist and the token is in fact reflecting that stock. And so I think as we've evolved into digital asset creation, so for example, all the loans that Figure creates are digital assets. They're all native to the blockchain, as is the equity in our cap table, as are the payments that we run on Figure Pay and the rail system. That evolution has really opened up the opportunity to deliver into the value prop of blockchain, which is trust versus truth and real-time bilateral settlement.
Mike, shifting to SoFi, your other company, you had some troubles a few years ago, some accusations of sexual misconduct and sort of a toxic work environment. And those sorts of problems are not immune to the crypto space as well. What have you learned from that experience? Are you approaching how you manage this company differently? Tell us a little bit about all of that, please.
Yeah, I mean, what we did with Figure is we really wanted to build it on a culture around teamwork. I think one of the challenges that we've had historically, and I had historically, is making sure that we had everyone rowing in the right direction. And I think with Figure, we've been able to do that very effectively. And I think we built over 300-person employee organization that's been very effective working together to conquer and challenge blockchain problems. So, optimistic about what we've done so far and very happy about what we've done so far, and very optimistic about what we're doing in the future.
Okay, Mike. Well, thank you for joining us this morning and explaining a little bit about Figure with us. Appreciate your time.
Thank you.
All right, that was Mike Cagney, CEO of Figure. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick.
Hey, good morning.
So U.S. congressmen are reintroducing a bill to support investors with forked crypto assets. What can you tell us about that?
Yeah, so this is Congressman Tom Emmer. He's been a longtime crypto proponent in Capitol Hill. He reintroduced a bill that he's introduced a couple times now about basically asking the IRS to clarify how it handles forked assets, basically trying to minimize the tax burden on U.S. residents who might otherwise end up, paying twice as much as they should be on their crypto holdings.
Nick, what's going on with the FDIC? I hear that there's some news from them.
Yeah, so last week I think we talked about Chair Jelena McWilliams saying that the FDIC was going to publish a request for information about how banks are handling digital assets and what, if anything, the FDIC should be doing. So that request for information came out yesterday, and it has a number of questions dealing with issues from deposit insurance to supervision to compliance concerns, basically giving the general public in the U.S. until July 16th to basically say, what are cryptos being used for on a bank level? Should the FDIC be looking at digital assets for banks? Is there an opportunity for regulated entities that fall within the FDIC's purview to be able to safely handle digital assets and maintain their, FDIC insurance? This is just the first step. They're just asking questions at this point. But I think the bigger significance here is that now we have the FDIC, the Fed, and the OCC all basically, saying, hey, we see that crypto is a thing. We see that regulated financial institutions are getting in on this, and we want to know, how to get further involved and to make sure things stay safe for consumers.
Nick, we've got the FDIC doing things. You mentioned Tom Emmer's bill. Yesterday, we talked about Cynthia Lummis's bill. It does seem like there's a flurry of activity in Washington right now around new legislation with regards to crypto and digital assets. What might be behind this?
Yeah, I think part of it is just the fact that, there has been this bull market over the last couple of months. But even beyond that, during the last bear market cycle, people were kind of building out this technology and trying to create new use cases. And a lot of that really, drew public attention from DeFi summer last year to all these, NFT projects that are now kicking off. I think lawmakers do see this as something that has to be addressed at some point or another. And there are enough lawmakers now in Congress who are familiar with crypto that they're adding these things to bills or writing bills entirely about crypto and, getting them passed. So, yeah, I think this is the first time. This is just me speculating, but I'm pretty sure this is the first time we're about to see both the Senate pass a bill that creates a crypto or digital asset, digital ledger, priority, as well as the House pass a bill earlier this year that seeks to try and clarify how digital assets are treated by the SEC and CFTC.
Seeing
two
some
separate
more clarity.
bills, but both passed by one member, one House of the Congress.
Okay, thank you for the update, Nick.
Thank you.
That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. That's it for First Mover. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, as well as special guest Michael Casey, Chief Content Officer. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.